under the advanced trading strategies and concepts, and we are moving now towards the fourth chapter of our journey, and this is being called the candlestick charting techniques. Now this, I don't know how many of you are familiar with this candlestick charting techniques. These are Japanese. This actually came from Japan, and as you are probably aware, they are being part of our trading analysis, day-to-day charting. But it wasn't like that forever. Let's say that the Western world has embraced these techniques because let's say they recognized the power and the validity of it. Now, first of all, before moving forward, candlestick charting techniques implies that you are having a chart with candles. Okay, so what you're trying to look on under these techniques is only based on candles. So if you have a chart, a bar chart like this, or a line chart, that won't help you. You need candles. For the purpose of our analysis, we will use red and green candles. Red meaning bearish, and green candle meaning bullish. And maybe you'll wonder, for example, why these candlestick techniques are so important. Well, they are important because, first of all, they are easy to understand. Okay, so easy to understand. All the concepts are clear, are straightforward, and they provide early indications about possible moves in the market. Now, under the candlestick charting techniques, our first chapter, our first journey would be to try to look at some reversal patterns. Okay, now under the reversal patterns, the most important one, it is being called the hammer. Okay, so the hammer. What's to go with, for example, when looking at reversal patterns, they are closely watched by traders because, let's say that you are bullish, okay, and the price is just falling and it is going against you, and you are looking for signs that the current situation might reverse. Then you look, of course, for reversal patterns. If under the Western approach you have reversal patterns such as double tops or double bottoms, like head and shoulders or reversed head and shoulders, when under the Japanese candlestick charting techniques, one of the reversal patterns, it is the hammer that we are going to look. First of all, what's the most important thing to know in hammer is that it is a reversal pattern, but it appears only after a market is falling. So you are looking to identify a possible bottom with a hammer, not the top. Okay, so that's extremely important. Then the real body of a hammer, the real body meaning, if you have a candle, this is a candle. Okay, the real body meaning this part of a candle, okay, not the shadow. What you're seeing here, these spikes to the downside or spike to the downside or spike to the upside, these are being called shadows. So a candle has shadows and real body. Okay, for example, in here, this candle has a strong real body, This is like let's say half. Okay, so the real body of a hammer can be green or red, it doesn't really matter. What's important to note is that it appears when price comes from the downside, from the upside, sorry, in a falling market. And one important characteristic when you're looking for a hammer is to keep in mind that this is a bottom reversal signal. So we are trying to identify bottoms when we are looking for hammers. They are being formed of an extending lower shadow. So lower shadow, like this one, for example. Okay, extending lower shadow. Okay. So extending lower shadow and the small real body. So the real body should be small compared to with the shadow. basically, if you take into consideration these two characteristics, they are quite easily to identify on the chart. This is a weekly chart on the euro dollar. So if you are trying to look for a hammer, so you are looking for a downward trend, and try to identify hammers. For example, this is a possible. Let me take a shape in here and try to mark it in here. This is a possible hammer. As you can see, you have quite a long shadow and the small real body. Ideally, the small real body should be as much as possible onto the top in here. But this falls very nice into the category of hammers. And as you can see, you had a little bit of a reversing, not quite a trend reversal. Okay, so this is being called a hammer. Let's see in here. This is another hammer. This is another hammer. Okay, this one in here, this candle in here, it is being called a hammer. As you can see in both these examples, are respecting the characteristics of a hammer. They come after a falling market. Okay, the extended shadow and the small real body, shadow and small real body, falling market. This remember, this is a weekly chart. If we move forward like this with our analysis, this is also a hammer. See, falling market. Then you have a hammer with this one is with a green body and extended shadow. If you're looking to trade such a pattern like a hammer, ideally you should wait for a correction to within the hammer's lower shadow. So if this is a hammer, so you wait for correction. See, is the hammer in here. Now the very next candle, this is a weekly chart, so very next week, market try to push to go lower than the extreme shadow, the extreme low under the hammer shadow. Okay, but fails once, fails twice, and then just blasts to the upside. Okay, so you wait for a correction to within the hammer's lower shadow. Okay, before taking a trade. But this correction, it is not mandatory to appear, as many times market just flies away from that hammer, and you will not, basically you may not have this opportunity. From my experience, and you should take this with let's say with the experience of one being involved on the currency market for quite some long time. So from my experience, the higher the time frame when you're looking for a reversal pattern like a hammer, the better the chances of identifying a great rally. They are still valid also on the 1 hour chart or on the 5-minute chart, but given the fluctuations and the great volatility on the currency markets, they mainly are being let's say targeted by stop loss hunters. Okay, so this is a weekly chart, but if you go, for example, let's go on the 1 hour chart and try to identify a hammer. Well, a hammer comes after a falling market. Okay, so as you can see in here, this is a falling market, and you have in here a hammer. Sorry about that. You have in here a hammer, and this hammer is with a red body. See, with a red body, so you have an extended shadow, a red body, and then the price goes away. Normally, you should wait a retest for the shadow in here, and the retest comes only for the market to go and jump to the upside like that. So they are working also on the 1 hour chart, but the level of validity, so to say, is more important on the higher time frames. Let's identify one also on the 4 hour chart. So if you take a look on the 4 hour chart in here, this is also let's try to see if we have something in here. Yes, this looks also like a hammer. This is our shape from the the higher time frame. But this also looks like a hammer. So price coming from the upside, okay, makes a nice hammer in here with a red real body now, and this is our hammer. And then on the very next one, on the third candle, the lows on the shadows in here are being tested only for the market to blast to the upside. And this is 129, okay, and market goes towards 130.22, so 100 and something pips based on a 4-hour candle hammer. It's not let's say it's not an easy task, and it is not a little, okay. This is a 4-hour chart, so the higher the time frame, and it goes for 10 candles. So 10 candles multiplied by 4 hours, you are having 40 hours that the market reversed based on this pattern in here, based on this hammer. This is what I wanted to show you under the first reversal patterns. This is the hammer, and keep in mind, the higher the time frame, the more important the reversal, the bigger the reversal. So this is a weekly chart. So in here, this is a hammer, and from this moment on, this is let's say 127, and it goes towards 137. So almost 1,000 pips after this reversal pattern. Okay. Next, we are going to look at the opposite of a hammer. It is being called a hanging man, and the hanging man comes after a market advance. Okay. So until next time, stay safe on the markets.